Hi everyone. In today's video, we are going to work through question 1 from the May-June 2024 accounting paper, variant 21. This question isn't just useful for Cambridge O-Level students, it's also a great practice question for anyone looking to brush up on double entry bookkeeping and prime entry books. I'll guide you step by step so you can master these essential concepts. So let's get started. Here the question provides us with some information. First we have some balances as at 1st April 2024 and then the transactions for the month of April. So let's take a look at part A. Part A, we are supposed to prepare the sales journal. Remember, the sales journal is a prime entry book and it records sales for the period, credit sales. So in the sales journal, we will record the dates on which the sales were made, the names of the customers and the amounts. So if you take a look at the question, you will realize that the first transaction that occurred on the 2nd of April is a sale to Ava with the list price of $150 and there was a trade discount of 6%. Remember, a trade discount is a discount offered to encourage customers to buy more. So when we record a sale, we have to record it after deducting the trade discount. So let's first calculate 6% of 150. It will be 9. So when we are recording this, we have to show the net amount. So the name of the customer is Ava. 150 minus 9 will be $141. So that's the first sale for the period. Then there is another sale on the 12th of April to Nuru of $165. This is pretty straightforward, so we have to record on the 12th of April, Nuru $165. The final sale for the period was on the 21st to Mahia, list price 480 and there was a trade discount of 5%. So 5% of 480 is $24. In the description it says that there was a cash discount. Cash discount of 5% if the invoice was paid within 30 days. My question is, should we record this? The answer is no, because the customer has not yet settled his account. Mahia has not settled the account yet, which means we don't know whether Mahia will make use of this cash discount. So we do not record it. So on the 21st, Mahia 480 minus 24, which is the trade discount, will give you a net amount of $456. The last step is to transfer the total, the sum of these three transactions, to the sales account. So on the 30th of April, we will transfer to the sales account. The amount will be $762, which is the sum of the transactions, the credit sales for the period. Part B, we are supposed to record the journal entry to write off bad debts. Bad debts or irrecoverable debts occur when a customer is unable to settle his or her account. So going back to the question, on the 30th of April, there is a transaction stating that Rachel has become bankrupt and Adu decides to write off the amount owing from her as irrecoverable. So what's the amount? It's $215, which you can find from the list of balances as at 1st of April 2024. So remember, when we are writing off bad debts, we debit the bad debts account or the irrecoverable debts account and we credit the customer's account. We debit irrecoverable debts because it's an expense, and when you write off bad debts, the expense is increasing. then it will be a debit. And we will credit Rachel's account because Rachel is a trade receivable, and trade receivable, which is an asset, will decrease because of the bad debt. So we will credit 215. Then you can write the narrative saying amount due from Rachel written off as irrecoverable. Part C, the first part of that question, we should calculate the total amount received from trade receivables during April 2024. So the total cash receipts. How do you calculate that? Let's go back to the question. So if you skim through the transactions, you will see that there was a cash receipt on the 9th, a telephone transfer from Ava, $689. So you will record that. And then there is another receipt, a check, $627 from Mahia. So you add that. And the last one is on the 19th, $760 from Nuru by electronic transfer. So you add that and it'll total $2,076. Question C, part 2, we should calculate the total cash discount allowed. So let's go back to the question. Take a look at the cash receipts, all the 3 transactions relating to cash receipts. So the first transaction received telephone transfer from Ava 689. It has nothing to do with cash discount. But if you take a look at the transaction on the 13th of April, it says the received check $627 from Mahia in full settlement of an invoice for $660. So the invoice amount was $660, but you received only $627. That means the gap, the difference between these two amounts is the cash discount allowed to Mahia. And the next transaction, which was on the 19th of April, received $760 from Nuru by electronic transfer. So that was the amount received, the cash received. But Nuru had deducted 5% cash discount. So there was a cash discount of 5% already deducted from this, from the invoice price. So 760 is after deducting that cash discount. That means if the invoice price is 100%, 760 will be 95%. And the 5% will be the cash discount. So this is maths. You have to use ratios. So 760 divided by 95 times 5 will give you the cash discount of $40. So $33 plus $40 will give you $73, which is the cash discount allowed. Then part D, we are supposed to prepare the sales ledger control account. The sales ledger control account summarizes the transactions relating to trade receivables for the period. So how do you record the entries in the account? First, we will have to record the balance. And this gives us information about the balance brought down. So on the 1st of April, there was a balance brought down of $3,658. So you record that first. On the 1st of April, balance brought down 3658. And then on the 30th of April, we transferred the total of the sales journal to the sales account. We have to record that amount as sales in the sales ledger control account. So that will be a debit entry in the sales ledger control account, because if you try to think of the double entry, it will be a debit in the trade receivables account and a credit in the sales account. Sales is an income account. So debit saying sales, the total amount will be 762, which we calculated before. Then we will have to record the credit entries on the 30th of April. So we will have to credit sales returns. To find the amount for sales returns, we will have to go back to the question. And over here we have a transaction relating to sales returns, $30. So we record that. Then the total amount, the total cash receipts saying bank, which we calculated before, 2076, and discount allowed, which we calculated in question C part 2, $73, and now irrecoverable debts, $215. Then the last part is to balance the account. So let's calculate the totals. So the highest total can be seen in the debit side, $4,420. We record the same amount in the credit side as well, and then try to account for the difference. So the balance carried down will be 2026, which is the difference between the total of the debit side and the credit side. And on the 1st of May, balance brought down will be 2026. So part E is a theory question. Ado is considering changing his credit terms. He would introduce more credit checks on new customers and would increase cash discount to 7.5% for payment within 30 days. Advise Ado whether or not he should make these changes to his credit terms. So this question we should mention 2 advantages and 2 disadvantages and then recommend. So I would say that increasing cash discount will attract more customers and will increase sales. That's an advantage. And another advantage is that when you increase cash discount, customers will be encouraged to settle their accounts early, and that will reduce the chance of irrecoverable debts. However, higher cash discount means there is less cash inflow from sales. And another disadvantage is, remember, cash discount allowed to customers is an expense. So when you increase the cash discount amount to 7.5%, that will increase the discount allowed, and it's an expense. An expense increasing will decrease profits. So profit for the year will decrease as a result of increase in expenses from cash discount allowed. Finally, I would say that it is important to note that there is no guarantee that increased discount would surely encourage customers to pay early. So there is uncertainty. Therefore, I recommend Ado not to proceed with this change. So that's my answer. And with that, we come to the end of the first question in this paper. I hope you understood everything, and if you have any questions, please comment, and I hope you enjoyed the video. Thank you.